Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 24th of May. All right, as expected, you can expect the twos and fros of all these news events, as per usual, to continue. Now, the latest update, no signs of progress from White House, Republicans in tough debt ceiling talks, right? Now, you could probably expect tomorrow that they're getting closer to a solution, and the next day back to no solution. So this is the ongoing pattern you get with these major sort of geopolitical events. And obviously, since this is in the US, it impacts the global market. So we are seeing a little bit of, well, not really whipsawing, but the equity markets, okay, NASDAQ, I mean, it was well up beyond the S&P and the Dow Jones anyway. It's come back as well. So you've seen a bit of a retracement there. The dollar, well, it's pretty much the same. I mean, at the moment, like the good sign right now for the Asian session, we have a risk-on situation. Okay, US equities up, Euro, Sterling, Aussie, Kiwi up, and the dollar down, right? So that should give you a little bit of confidence. But once again, just have a look. The market is pretty muted as far as how far it's moved. It's only a couple of pips. So looking at the major news releases, okay, the RBNZ expected to raise by 0.25%. That's factored in. So if they don't raise, obviously there's a chance for Kiwi to fall. And you really want to be watching the statement and press conference there as well. It's not as easy as just trading that number. But as I said, if they don't raise rates, Kiwi will have a knee-jerk reaction to the downside, and then you focus on the statement and the press conference. Now, the key data, any inflation numbers are huge. The CPI and the RPI, the Retail Price Index out of the UK, like, to me, this is a situation, an opportunity to trade sterling against the crosses. Right, take the dollar out of the equation, and then you don't have to worry so much about this US debt ceiling or the US issue. Right, that's a key part to sort of managing the trades. Same with the IFO business numbers. Now, these are a good number to really track. But once again, I'll be looking at euro against the crosses. Take the dollar out because it is disrupting things, and we are sort of seeing moves and muted moves. So that's where we pretty much are for today. It's there's nothing else to sort of really focus on. Just a quick look at the charts. Okay, the dollar index still sort of cruising top side with dollar yen. You can see a really nice correlation there. Dollar Swiss heading up as well. And dollar CAD's trying to go up even though oil is rallying, which is going to put downward pressure on dollar CAD. Euro, well, these Euro, Sterling, Aussie and Kiwi are trending. Less so the Kiwi. It's trading sideways, waiting for the RBNZ. But man, I've been saying this for a while, and we need this news event sort of completed because all the data in the US is weak, right? So there's no need for the dollar to be going up, okay? If it's a safe haven proxy, well, so be it. But once this news event is over, we could see it sort of really retrace to the downside. So to me, focus on where the action is. Sterling, obviously the CPI numbers, very important. Keep an eye on those. But as I said, you probably want to be focusing on the sterling crosses. That's where the easier trades are going to be because the dollar side of the equation is not exactly making things plain sailing. All right, guys, that's it from me. Keep an eye on the news. Keep an eye on the updates. I don't expect this US debt ceiling to be resolved ahead of June 1. In fact, I think it'll probably go a couple of weeks over. But, there's nothing we can do around that except just remain calm, discipline and control, look for the opportunities and understand what you're trading. Sterling, euro against the crosses is my recommendation. All right, guys, have a good one. All the best. Cheerio.